Ladies and gentlemen, welcome back. And today we have a fantastic day as SoFi continues to push higher. $16.25 are up 4.7% right now, potentially even pushing a little bit higher, depending. It's because of this news right here. SoFi and PGIM, which is one of the largest fixed income managers, is now announcing another $525 million securitization agreement with SoFi to end up packaging up their personal loans, or a percentage of them, and selling it to their investors. Okay. So think about this like a mutual fund or something like this for stocks. This is sort of what's happening. So SoFi users that are actually wanting a personal loan will, depending on their cash flow, their FICOs, and their income, will get a certain interest rate attached to that loan as that's the agreement that they made with SoFi. But now SoFi is packaging that up and saying, hey, if you want this interest rate and look at the amount that we actually lose on the other end and our cost of funding, would you like to buy this loan from us so then you can sell this out to your investors? So that's exactly what this securitization is. Okay. Now it's interesting. There's a couple details here that I find very cool. One, this agreement closed in Q4 of 2024, which if we actually look back on their last transaction, because this is not the first transaction that they've done with PGIM, okay? They did a separate $350 million agreement already in 2024, okay? So the agreement was actually signed in Q1 of 2024, but actually ran through all the way through Q3 of 2024. So think about these loans as essentially being spread out across a 6-month period. So if that is what's happening here as well, we could be seeing Q4 with benefits of this sale going all the way through Q2 of 2025. Okay. So hopefully we see some benefits of this sale in 2024, but it'll mainly be in 2025, I believe. Now, what I think is so amazing about this deal, especially, is one, what happened to the fair value of SoFi's loans, right? Are they written so poorly that the banks and asset managers that are coming and buying our loans, are they not seeing the fact that, these are poorly drawn up and that the quality of these loans are actually worse than what they expect? I mean, PGIM must have learned from the first time that they bought our loan. Why would they be coming back with an even larger purchase agreement? Before it was 350, now you're doing $525 million with SoFi. What happened to fair value? What happened to all these $4 bears that said that our loans are crap? I guess the company that has nearly $1 trillion doesn't think so and wants just a little bit larger of the slice of pie with SoFi. The interesting thing that I've learned while researching SoFi is that a lot of their loan purchases don't come from a bunch of different names. The customers that actually come to buy loans come back for more loans. Okay, so we try to get more names if we can, but really it's about strengthening these relationships with companies like PGIM, BlackRock, Fortress. These guys are going to come back and continuously purchase our loans from us. So this is just another, indication that that is very much the case, is that we're deepening relationships with SoFi, and they're actually really thrilled about this. As what Edwin says here, the co-head of securitized products at PGIM, he says, SoFi's personal loans represent an attractive investment opportunity for PGIM, and we're thrilled to deepen our relationship with the company. We continue to expand our platform as an asset-based finance lender and source investments that provide compelling risk-adjusted returns for our clients with partners who put their customers first. Definitely not a bad shout out to SoFi. And then Anthony Noto also says that the investment demand for SoFi's personal loans underscores the quality and strength of our lending business, which contributes meaningfully to our durable growth. But we have to remember, this is not a loan platform deal like what they're talking about down here with Fortress. This is an original securitization. So we could have done this even before Q3, like we've done previously with PGIM. It's good to know that one of the big bear cases for the loan platform business that SoFi has recently started to push out was that it might be cannibalistic to their old sources of wholesale selling loans or securitizing loans. Well, it actually turns out that, they are still looking to have pretty sizable markets to securitize their loans with, existing partners. But let's go back and remember this article right here. Eric Schopenhauer, who bought essentially $500,000 worth of SoFi shares, and he is the executive vice president of the lending department on December 16th. Was this deal sort of in talks, and did they know that there was a lot of these transactions that were essentially going to be boosting up SoFi? Obviously, I'm not insinuating that there was some insider trading here or anything, but it definitely looked good timing that SoFi's head of the lending department was being so bullish on the company, and now we're seeing potentially why. Now, this wasn't the only thing that was very exciting from SoFi today. In fact, there was a piece of news that came out that was not SoFi's doing, but it does benefit SoFi, is just to show off how bullish the market is on this company right now, as Defiance is now putting out a daily 2x long SoFi ETF, or essentially for every share of this, you're actually taking double leverage on SoFi, or essentially a 200% beta, essentially. So if this was to fall, you'd fall by two times the amount. If you were to increase by 10%, this will potentially run by 20%. Okay. There is a little bit of caveat to whenever you're buying these 2x leverage funds, is that if SoFi was to literally get cut in half, 50% in a single day, or even by 99% in a single day, by some weird metric that ends up happening, that the company would be fine. They would continue to try to grow, and potentially they can rebound later. With these types of funds, not only do you have high fees for actually holding them, because for them to actually get this margin, you're essentially buying margin with your ETF here, or with your stock, that if it drops by more than 50% in a single day, SOFX just simply goes away. Because the way that the double leverage works, you're essentially just getting 100% loss, and there is no returning from that. Now, that is a very long shot. You're probably immune to that ever happening, but it is a technical possibility. I'm not personally going to partake in the SOFX, but I mean, there's going to be people that see that as very good ways of just easily buying SoFi for potential catalysts like earnings results and these sort of things for trading on certain days. That might be interesting to some people, but let me know your thoughts. Are you going to be buying SOFX? Are you getting excited about Q4 earnings? Let me know down in the comments down below. While you're down there, potentially subscribe. Bye for now.